meaningful. I'm hearing a lot of comparisons to, 1980, although a lot of other people say this is not a bubble that has burst dramatically. What do you think fundamentally is going on here? Because a lot of factors are still staying, like a strong China and India demand, central bank buying. I mean, what are you thinking here?
At this point, we talked about how tricky it was up in that upper area. The course was getting so loud. The gold trade became so damn crowded. And I know that I've been using the tier system, tier 1 through tier 3, and we've been saying if you have the long-term thesis, which a lot of people still do, and you didn't get stopped out on this uptrend break, stay with your tier 1 because it still has a lot of gains in the year. It still has a lot of positives. But if you're trading it short term, or you're looking to be fully invested, you can't be in gold because with the crazy price movement that we've seen, it can go lower and it can go to the 200-day, which is an area that I'm going to be looking at. So if you look at gold and the GLDs right now on the chart, you will see, this was that top. Remember, first this was the first top, violent move lower, held support, gave you move back to the highs, and then it had one of those outside days, a day to take notice, a day to get lighter. Then you had a lot of this choppy, erratic trade right in here. This is where I said either we're going to resume and break to the upside or you got to get out and got to get short. Unfortunately, they didn't give you the chance because they gapped it lower, and then they gapped it lower again. And now, you had a small little reversal. I think we were lower than this morning. I think
we were down as much as $60. It was 1535, which was pretty brutal.
Well, 1535, I believe, is the 200-day.
Yeah, but then it bounced.
Okay, so unfortunately, it did it last night. Let's see if we can get those levels tested today. So the guy that was sleeping like me, trying to get his rest for the morning call, could buy some in that area. So I'm going to be looking to see it that 200-day around 1530, 1540. Or if you look at the GLDs one more time. This 150, this 153 area looks pretty big, or this zone between 150 to 153. That's an area that if you sold this strength and you're looking to get back into a tier 2 or looking for a cute day trade for a swing long or whatnot, that's the area.
And then talking about rebalancing at the end of the fourth quarter, this is going to be a big asset. Not only did it run 34% for this year so far, so you want to take profits and then show, hey, look what I did in gold, but also you're not going to want to own this in the next 5 days because it's just plummeted so much in the last 3 days. So I think that's also going to contribute to that kind of volatility as well. But that doesn't mean the fundamental story is dissipated. I think people have to realize that.
The unfortunate thing is people have life preservers for their money. And over the course of the past month, people thought it was gold. They thought it was silver, the Swiss franc. And lately, like right now.
Dollar.
Yeah, that's about it.
That's definitely going to hurt gold, yeah.
So people who thought they were safe or they had the strongest, whatever it's called on the Titanic ship, or the life preserver, they got thrown off. So now there's not that many life preservers left. That just shows you how dangerous things are, and that just shows you sometimes less is more, and just preservation of capital is key.
So I'm guessing this is probably a really bad time to own gold stocks, but I definitely want to hit on them because I was at the Denver Gold Forum last week, spoke to a lot of CEOs, saw a lot of presentations, took away some interesting stuff, so I wanted to get your take on some of the stocks. The first one was Newmont. It was a big story last week, changed its dividend policy. So basically the deal is if gold's between $1,700 and $2,000 the quarter before, and that's what they sold it for every $100 move, they're paying 30 cents extra. If the gold price is between $2,000 and $2,500, you're getting 40 cents extra. So it could yield as much as 3%, more than the S&P average. That's a really amazing figure, especially the 10-year yield, under 2. But I want to see if it makes a good stock to trade.
Well, question is, what happens if gold stays below 1,600?
Well, then they still go, it still is correlated to how they sell the gold. So it's just less.
Just less.
It's still correlated. So if I sell the gold for $1,000, then it's related to that sale in the next quarter.
There you go. Well, Newmont, it caught fire. It broke above that downtrend. A lot of people thought with gold potentially going over 2,000 for a lot of those reasons that Newmont, was a must own, and just shows you how you can't get excited about anything in these markets. That it's really pricing and timing. And if you look here at Newmont, you will see Newmont had a nice run. We've spoken about Newmont.
It did hold it better though than the rest last week, I have to say, and I wonder if that's because of the dividend. But anyway, go ahead.
It could be. So this was your entry. This is when it broke above 58. It broke this downtrend, gave you some nice moves all the way up to 70. And then if you take a closer look here, you didn't get the chance to sell it with an outside day, but this was an inside day, closing the lows at a little bit of a sell signal. And now it's holding above, what is this, the 50-day? So if it's holding above the 50-day, it's still okay. If you sold some into the strength, perhaps you could buy some back if you were looking for an entry in Newmont around the 50-day for longer-term holders. That's where some institutions want to buy it, around 60, 50. If you want to get involved, just do a tier 1. Don't do anything more than that.
And then let's go to Royal Gold, because I feel like if gold prices can stabilize and sort of move around and consolidate, that this might be a good stock. Because if risk is really on, Royal Gold's kind of boring. It's a royalty company. But if risk is totally off, this is a safer, quote-unquote, way to play it. You're going to pay a premium, but you're getting a safety play.
So let's take a quick look.
RGLD?
There you go. Oh, it just shows you also this is a high beta name versus Newmont, obviously, in gold, and it already came back and retested this breakout. So if you look right here, this is when we spoke about, oh, they want to buy that?
Yeah, that's my phone. Yeah,
Right.
calling me right away to go buy a stock.
There you go, above 70. It went as high as 80 or so. Look at the push through failure here, guys. I want to show you this because this is a sell signal. People make fun of me when I say push through failure, but this is when something tries to break out, closes on the low. That means there's no sustained commitment. You sell some. I don't care what stock, what sector. From here, 3-day down move. I guess if you had to be long versus this 69.36, I'd rather see you buy it here than up there, but it needs to prove itself that it's going to hold this range.
And then what about Rand Gold? I talked to the CEO, Mark Bristow, who is just a pistol. I have a couple of videos and articles up at the street. You should definitely check them out. He tells it like it is, which is very refreshing. He's not going to pay a higher dividend. It's 0.2%. He's like, I'm not going to be bullied by investors, but you're getting some seriously high-grade gold, like 4 grams per ton. Other companies are looking at like 0.89 grams per ton. Makes a big difference. Mine's
the high-grade gold.
High-grade gold. No, that's a big, because then you don't have to mine as much to get more bang for your bucks. You're not over-mining your properties. Mine's in West Africa, which is risky, but what area isn't risky now with the threat of higher taxes like permeating everywhere, probably except for North America right now. But I want to see in terms technically what would be a good buy level if you were interested.
Let's take a quick look because we always love bang for the buck. And there you go. Actually, I think I just put up Umana instead. So this one, just to show you quickly, that moving average is 1288. This one also, just like the Rand Gold, came down really fast because it is a high beta name.
Royal Gold. We haven't looked at Rand Gold yet.
Oh, Royal Gold. There are so many names within this whole little crew here. So at this point, I think that all of these, as long as they test and hold their 50-day.
Let's go to Rand Gold. GOLD.
There you go, GOLD. My fault.
We're gonna get you there.
Yes,
we got you there.
Here we
Okay,
go.
there we go.
See, this one also, it had a bit of a reversal type day there. It broke this upper end with a gap, which traps this whole crew here. So it is coming in to test a prior breakout area. So, from 115 down to around this 90 and change, I do think if you're looking for an entry, just a tier 1, because gold and gold stocks are going to have to prove that they can be bought on this dip, because these situations are very, very violent, and a dip could turn into a much bigger dip.